This is the Power Producers Podcast, where we are refining and redefining the sales game.
Rule number one is you have to believe in yourself. You're the only one who doesn't think you belong in this appointment. The prospect has already validated your existence by scheduling time with you. Get it through your head you belong here, go in there, crush it, and close the deal.
A place where sales professionals can come to learn from other sales professionals and thought leaders that have mastered their craft.
The difference between a good salesperson and a best-in-class salesperson is only 2 minutes. By spending an extra 2 minutes on what you might think is a mundane task in the sales game, you separate yourselves from the pack, you grow your book of business, you close more deals, and you retain your accounts.
As well as their peers who are still striving for perfection to achieve their why.
I have a wife and 4 kids. Failure is not an option.
Real sales professionals, real stories, real results. Are you ready to feel the power?
Hey, everybody. Welcome to the Power Producers Podcast, where we are refining and redefining the sales game. And today, we actually have guests with us that I'm excited to talk about because they do something that I have zero experience doing in my entire career. And that is public entity insurance and risk management. We have Carson and Bob from Saville Public Entity as our guests today, and we're going to get deep into how they can help you because I know we have a ton of listeners who actually do write this business, and I'm really looking forward to sharing these guys' story with you. Probably heard it before, but hopefully if we do our job, you guys are going to learn something new. So first and foremost, Carson and Bob, thank you so much for coming on.
Yeah,
why don't
Dave,
you guys
having us?
Yeah, absolutely. So why don't you guys just sort of give the quick overview of who you are and how you got to where we are right now. And then we're just going to see where conversation takes us and ask you questions as you give us answers.
Well, I'll lead off. I appreciate you having us here, and we're looking forward to the next hour. I started Saville public entity back in the mid 80s. And at that time, there really were no self-insurance pools. Every state has a self-insured comp or self-insured liability pool for the cities, counties, and schools. But at that time, we were in a hard market similar to the one we're in now. And there was a need for the pools, and they all began in around 1986. And developed from there. So at that time, we were writing some of the first public entity policies out there. And you probably wrote one of the first public official liability policies with AIG back in the mid 80s. But we developed this idea that we had, and overnight, within 18 months, we had written $12 million of premium, which was quite a bit of premium back in the 80s. And there was no, as you can imagine, there was no internet. There was no quick means of communicating, and there was no quick means of underwriting. So we took these Excel worksheets and built Excel programs that would rate the auto and that would give us a quick way to rate 1,200 vehicles in about an hour. And by doing that, our program evolved. And through the years, we were in Georgia and the Carolinas and Tennessee and Alabama, mainly the Southeast. And we built that up to about $30 million of premium. And I sold in 2003. To one of the big brokers and worked for them for a little while. And then about 6 years later, we left, and Carson graduated. You graduated in 2010?
Yeah,
right?
so I went to Auburn and called Bob about the time of graduating right after the recession, 2008, and said, hey, you want to get this thing started again? And so I went to AIG boot camp, and Bob started this in the basement, and I came and joined him about 2 years later, and we just cold calling every day, sharing a desk about like this. And it was tough back then, man. I mean, we had no business, no employees, and we just started calling. We started in Alabama and worked our way around the country. And that was about 15 years ago almost.
Yeah.
And now we got 10 or 15 employees. We're in 35 states and about 350 cities and counties we insure.
Looks like you got enough time to rock out a few sets of preacher curls in the off time.
Yeah,
too.
man.
You're going guns today, man. I'm jealous.
Yeah. I wore my long sleeve shirt for that.
Good move. I would have too had I known. But I mean, that's crazy to think, though, to scale to 12. I mean, just 12 million as quick as you did, knowing. I mean, I wasn't in the insurance industry in the 80s. I was still in junior high and high school, and even elementary school for a portion of it. But you know, I grew up understanding, you know, what limited technology looks like compared to what we have now. You know, I remember even getting my first cell phone. I had to worry about whether or not the cord for it was going to get tangled in the gear shifter in my truck, you know, driving down, trying to have a conversation in it. So, I mean, that's really, really impressive. But, you know, it also speaks volumes about the fact that technology just makes it a little bit easier. If you have a good product that solves a problem people are facing, they're going to find out about it. You know, word travels really, really quickly. There was a time where I was down, not publicly related, but or public entity related, but I had found a program for feed mills and specifically feed manufacturers. And it was a group out of somewhere in the Midwest, I think Iowa maybe, and nobody in Florida had seen or heard of it or whatever else. And I was doing research on prospects and found this little program. And I went down to Okeechobee and was going for one feed mill. And it just so happened that the two guys that ran this company were going to be in Tampa. So we went out to dinner the night before, and then we jumped in the car and we drove down to Okeechobee, and we're sitting there meeting with the first feed manufacturer. And I can hear the receptionist out in the other room saying, yeah, they're here. All right. Well, they're in there with him now. I'll let them know. Thanks. And the lady comes in and says, hey, when you're done, can you go down to, you know, Gator Feed, which is kind of next door, although next door is not next door in Okeechobee, but, you know, and so we literally went right down the street, feed mill to feed mill. The next one would call while we were meeting. And we ended up writing like 6 or 7 feed mills in a single afternoon because we showed up with something that they didn't have. And I mean, I got to believe that some of the dynamic that you faced, you know, people were probably coming out of the woodwork, reaching out to you by the time it's over and done with.
That's true. You know, I would get in the car back then. We all have trucks now. But I would get in the car and leave Atlanta and work my way down to South Georgia and have 8 calls by the time I got to Valdosta, and then turn around and have 8 more calls on the way back the next day. And every one of them was a good prospect by the time we finished. And, you know, we would meet with the agents, and it was interesting back in the day, if you will, since we didn't have any internet. We didn't even have fax machines.
What was the bill for the carrier pigeons?
Say it again.
So what was the bill for the carrier pigeons?
Well, it was tough.
My favorite story, though, of the faxing is, you know, we've run into a lot of bid situations, and it's, you know, whoever's first in with the loss runs. And so Bob tells this story of, you know, back in the 80s and 90s, right before fax machines came out, people would run to the city hall, bid gets released, loss runs are out. Everybody's in their truck going 90 miles an hour to submit it to the carriers. Well, people started getting helicopters and flying into City Hall and taking those loss runs out.
Oh, yeah.
And Bob got crafty and set up a fax machine in his truck and beat the helicopters.
Yeah.
And that was just blew people's mind back then until we got this thing called email.
That's crazy, man.
So,
yeah, we have a lot of stories like that.
Yeah.
And we, you know, when we grew this thing and then we sold, which is another story in and of itself. After I sold and I got back in it again, my goal was that I had a lot of knowledge. We had Carson to sort of run the operations. And these days I spend most of my time consulting with agents, helping agents. Half the agents I work with, we don't write their coverage. And we don't write it for the city, but they just call in, we talk to them, we give them direction and say, you need to leave it with your own carrier, or maybe you should consider 2 of the 3 alternatives. But we can usually fill them in on what their local pools are doing or what their carrier options are. And my goal right now, Carson came in and he's done things that I didn't know existed and expanded the company and is able to take it to the next level. But I spent a lot of my time just consulting with insureds and with cities, counties, with agents, with brokers, doesn't matter the size.
So here's my question. You didn't do it once, you did it twice. What drew you to public entity to begin with, number one, and what made you decide that's the route you wanted to go when you jumped back in 6 years later?
Well, that's a good question. I remember I'm an accounting guy that's my degree's in accounting. And I was going down that road and I got with just a independent agency. And one of the first things they told me was, don't ever get in that public entity stuff because it's all bid business and you'll never be successful. So, as I've read books over the years, what people tell you will not work is usually where you want to go. And so a friend of mine I'd seen helped me get in it in the mid 80s. And, when I got out of college, I was working for a bank and I started at $10,000. And that was one of the good positions. So I worked my way up to $21,000 after 5 years and thought, well, I think I can do better than that. And got into the insurance. And when he came along and said, well, I'll pay you $30,000 if you'll come work for me. And I thought I had died and gone to heaven. So in the public sector, I arrived, and the thing has grown, and it's just been a joy to work in the public sector. I'm helping people all the time, and that's my goal. Is money's a great byproduct of it, but if we can help somebody and really help a city, because I've got a lot of risk management degrees and stuff that you probably shouldn't put on your card. And so I'm able to walk into a city and help them write a safety program or do a risk management program or identify the problems there that are that they have. And at Carson, we went into a city the other day that they just had terrible problems and lots of claims, and we laid out reviewed their policies and procedures and laid out a program and already have them on the road to recovery.
And that was with the local agent that was there. And so we probably get a call every day from an agent somewhere in the country. Hey, I've got these cities I want to go after. And what do I need to do? Who do I need to talk to? And we can tell them the X date, the requirements to leave the current pool they're in. There's all kinds of different tricks we have to save these agents from going in front of somebody at City Hall just to waste their time. So,
yeah, and let's call it what it is. I don't know the media is the greatest helper for public entity risk management in most cases, right? Like, we're down here right now. We're at the either 1 year or 2 year anniversary from a young man that was booted from the Florida State Fair by the Hillsborough County Sheriff's Department and not taken to a safe environment to be dropped off. And they ended up dropping him off, and he tried to cross Interstate 4 and was hit and killed. And the family was awarded a $15 million verdict against the Hillsborough County Sheriff's Office. To me, number one, that's a very tragic situation that policies and procedures likely solves as long as the officer is going to follow them. But where I was going with that is that's an advertisement for other people, the sheriff's office in Hillsborough County is operating a little sloppy, may be an opportunity for us to do a quick cash grab if we, get involved with them and allege certain indiscretions or whatever else. I don't know, man. You see so much about law enforcement. You see so much about just things in general with cities. We went through issues with the school system here where they were going to discontinue busing to our home and my middle son was going to have to walk like a little over 2 miles to get to school each way. Not an issue. Okay. Like
barefoot in the snow uphill.
yeah. I mean, I'm not gonna say that it's like right around the corner, but if he needed to walk 2 miles, that the walking 2 miles wasn't an issue. The issue was it wasn't a safe 2 mile walk. And I'm obviously in an industry where I think about things a little bit differently, maybe than the average parent. So I go out and I start getting video footage of the walk to school. And then I sit and I set up my cell phone and do the traffic count while he would be walking to school, going right past the mouth of our street. There's no sidewalks at one of the busiest times of the day. And if he made it that far, this is almost like playing a video game. If he made it to the end of that level, he was going to go right, and he was going to have to pass in front of 3 registered sex offenders' homes in the next 1 3/4 miles to get to school. And I went to the school board and I'm like, this is nuts, man. Like you can't put kids in this position. What was the reasoning behind it? Like they're just trying to cut costs. And I said, I understand that I'm from a business background, and I honestly do truly respect and appreciate people who are public servants, because I know you're going to get grief all the time. But at the end of the day, I mean, I'm looking at this thing thinking, you're making decisions that are putting my son in direct danger based on that decision. And their answer was, well, you have the decision that you can drive him to and from school. And that's when I said, well, I also come from the business world, and I can't speak for everybody like me, but I think that there's enough people like me that live in our area that, okay, why don't we just charge for the bus, man? Like monetize it. Then we don't have to worry about budget cuts, and you'll be printing cash. I'd pay, whatever I needed to pay, because quite frankly, it's cheaper for me to do that than not be able to schedule early morning appointments because I have to make sure that my son gets to school. I don't know. I just think it would be really, really tough to be somebody who's a mayor or a city administrator or whatever. And I can't even begin to imagine the claim scenarios and stuff you guys see.
Well, you mentioned the budget. That's what all of these cities, counties, and schools live off of. They select that budget at the beginning of the year. And then from there, that's how they spend their money throughout the year. And so we always, that's the first thing we discuss with that city is, hey, what do you have in the budget for this? Because we need to alert you now if something's coming, like a big rate increase. We add a new city hall, flipped a fire truck, you name it. They got to incorporate that in the budget early, or else you're uphill battle.
We're right in that process right now, because most cities and counties and schools operate on a July 1st, 6/30 fiscal year. And so right now they're establishing their budget. So it's a challenge, because you have to go back to the carriers and try to determine what their percentage increase will be, what their exposure's increase will be, and put it in a budget, which is near and dear to my heart as an accounting guy. But the carriers and underwriters don't want to commit 6 months ahead of time to what their renewal will be. So it's sort of a chicken or the egg scenario. And we get caught in the middle sometimes with our agent or retail broker to figure out what should go in that budget. But if you can get it in the budget, unlike with a private sector account, if you can get it in the budget, then when you bring it in, their first question is, do we have this in the budget? If it is, then you're good to go.
Definitely a lot more complicated scenario on the insurance side. This is making me think about when I was selling office supplies. One of my territories was downtown Lakeland, and I would call on City Hall because for whatever reason, like a lot of places like that, they would have something set up like where they had to go through Staples or Office Depot or whoever, but for whatever reason, Lakeland could kind of do whatever they wanted. But I quickly came to realize that they could only buy in like certain cycles. And it was like you said, once the budget was approved. So I would make sure that I would mark it down on my little, leads list or whatever you want to call it, that I needed to be there on whatever, whatever date that was after they got things approved, because that's when they were buying everything. It'd be a massive order. But, it's interesting just, picking up on that totally just, this is something I completely forgot about until right now.
Yeah.
So
go ahead.
So here's my question, right? I think that this to me, and you're welcome to tell me I'm wrong. I've got thick skin. Public entity looks like a really dangerous place for agents. And the reason why I say that is I think there's probably a temptation for a lot of dabblers, right? Everybody's going to have a relationship at some place inside of their city, their town, their county, whatever it is, but they've never written this. They don't understand it, but they think, hey, you know what? My buddy just got elected mayor. I'm in now. I have the ability to come in and do this. Where do I start? Right. So to me, that's really, really dangerous. I think this is probably someplace where I think you need to be a specialist in it. I think that you need to align yourself with people who are even further specialists like your firm. But I'm interested, of the people that you deal with, how many of them are actual specialists in public entity versus those one-offs? That's the first part of the question. The second part is, and you may answer it in the first part, do you only work with agents who have a specialty and can show you this is something they're building a business around and you can grow together? And then the third part of the question is, what would you, and I'm sure it's all over the board, but I think too that people probably really don't have an understanding of the scope of size from small to big that public entity could be. And if there's a way to maybe just sort of describe what the average size of those are, because I want agents that are listening to this that are thinking, you know what, this might not be a bad idea for me to get involved in. I want you to tell them what's going to be expected of them if they do.
Well, Carson, let's
take
do
it?
those in reverse order and start with the size and the type. And interesting, you brought up schools in colleges.
Yeah, so the size, we've got accounts from $500 in premium to $2 million. So it just, the more metro you get, the larger you get, the more exposure you get, like any account. So I look at population a lot of times to figure out the size of the premium. You get a town with 1,500 people, they're probably not paying more than 30,000 or so. You start getting metro areas and putting all these other coverages with it and covering close to $1 billion in property values, you start getting up in the millions. And then a whole nother conversation of the SIR high deductible policies come in on that side. But I'm going to jump to the first question real quick, because that's kind of my life every day. I'd say 85% of our agents have got an insurance agency in town. My brother's on the council, or my best friend's the mayor. I've got the connections, but I don't know how to write a city or county. And they call us and say, I want y'all to handle it. I'm going to forward you all the stuff I got from the city. And then me and Bob and our team go to work. We go out to all the different markets in the public sector, got an application that we complete that all the carriers accept. We spreadsheet all types of losses and budgets and schedules, so that agent just sends an email and maintains that relationship. And then we prep him, we do a Zoom call with them, give them a good premium summary, because you got to present a 1-page, here's what you got, here's what I'm proposing. You can't hand counsel a 60-page quote. It's not going to work. So we get that local agent, that small town agent ready, and those guys write the business. They've got the small town politics. I've got an agent in South Georgia that I called probably 8 years ago. Said, hey man, I'm just throwing this out there. I don't know if you have any connections over here, but we called the county. They'd like to get a quote. And he said, well, I know just about everybody on the board. And I said, all right, David, today we write 4 cities, a school, and 2 counties with that agency that told me at the beginning that we don't even know if they buy insurance. I said, just trust me, brother. You go get the stuff. We'll make it happen. And I love those guys down there. But the other, I'd say 15% of agencies are your larger brokers, your Marshes and McGriffs and people like that write a good bit of public entity. But to them, hey, let's send it to Saville and let them deal with it, because they're the experts in this. Because what you don't want, whether you're a small agent or a big agent, is to be standing before council with your city manager next to you explaining why there's no sewer backup coverage and a house down the road's flooded. And that's kind of where they rely on us to pick through the coverages and make sure everything's properly covered. We're not missing any aspects. You got anything, Bob?
Yeah, I think the more educated an agent is, even in the public sector, the better partner they are for us. because they realize our value. And sometimes if you don't understand all the exposures associated with the risk, or how much work is involved in making it happen, and really the high probability it may not happen, they realize there's some value to that. So I would say 50% of our agents use the same carriers and have contracts with the same carriers that we use. And they choose to work with us, which means they, sometimes they'll make the same commission, but sometimes they might make a little bit less. And in those cases, usually we'll pay an agent 10 points, 10% or something in that range. But when we find that combination and they're politically connected, and virtually all the agents we work with when pulling something out of a pool have to be politically connected. And we walk through the process with them. We can tell them how many days notice they have to give to the pool, which, in Georgia, it's 90 days. So if we get a call right now for the municipal pool, which expires May 1st, we tell the agent, well, you've already missed your 90 days. So we try to lead them through so that they don't get all the way to the end and find out there's a roadblock that they'll never overcome.
So aside, we talked about the technology, how that's changed, obviously, since you started. You've been doing it for a while. Aside from that, what's been the biggest change in your industry that you've seen?
Well, the fax machines and internet were nice.
Yeah. Aside from the tech, though, has there been?
I'd say cyber's making a pretty big impact on it. I mean, I was at AIG when they rolled that out, and Bob and I used to quote cities cyber coverage with a name and an address.
Yeah.
And maybe some revenues if we had them from the budget on the website. And these days we're on the phone with IT directors going through. I mean, that's how this whole podcast got started. I had a call with a group that David recommended to kind of access these cities' internal platforms and see, hey, can we hack into these and what's their cyber risk? Because these cities are vulnerable. We see cyber claims all the time.
I believe that for sure.
Well, I mean, look at what both Atlanta and New Orleans had major cyber attacks.
Yeah.
I mean, you can't even get your head around some. I mean, and the other thing is, in the middle market, it's easy to quantify exposure. Like, I don't even know how to get my head around quantifying exposure on something like a public entity. I think there's just so many moving pieces and parts. I think that I would be intrigued by the challenge of learning it and writing it, but talk about really having to have a good skill set, which, truthfully, that's one of the main reasons I wanted y'all to come on the podcast, is because you're an invaluable resource. The problem that agents have is they're cheap and they're greedy, and they don't understand that sometimes you have to pay to get somebody else's experience, right?
That's exactly.
I would gladly take a 33% commission reduction from 15 points to 10 points any day of the week if I know that the people that I'm working with are subject matter experts. But I could say that, and there's still agents out there that are going to push and shove and argue. And here's where I win the argument, people. It ain't your loss ratio that's getting hit when there's losses. These losses are not affecting your contingencies. So while you may be giving up 33% by taking a 5-point hit on your commission, you're not adding what could be a shock loss to your book of business based on what's happening in public entity, and you're preserving your profit sharing, or at least insulating your profit sharing from that exposure. And that, to me, is worth its weight in gold. I do the same thing even with service contractors. If I've got a service contractor that I'm going to bring in and their auto's running a little hot, I'm not going to go to auto owners and ask them to let us, record the auto with them. It's just not how it's going to work. And so we end up placing it with somebody like John Mason at Shenango Brokers, who's got a variety of admitted markets, and I'll let Mason take the hit on his loss ratio if it needs to happen for the first year. And if we can get our risk management processes and procedures in place, then we'll talk about moving it over to Florida Risk Direct. But we can't I'm not willing to take the risk on the profit sharing bonuses that we get if it's something that I don't truly understand or feel like I can really do a good job of controlling the exposures.
Well, you make a good point, and especially where you started with the how much is involved in writing a city or a county or a public school. You go into a normal private sector account, and they have one thing you have to learn, and then you write that one thing under the general liability, and their auto and their property sort of look like all the others. But in the public sector, you have a police department, a fire department, you might have
Streets and roads,
streets and
public
roads,
works.
but all your utilities, electric, natural gas, water, sewer. And then you get into the cyber world, and it's endless. And especially in the public sector, I would say they're probably more vulnerable than a private sector customer. And that is one of the main targets of the bad guys. So we find ourselves, like Carson said, probably once a week, we're on the phone with an IT director, and we don't know how to fix the problem, but we know where the problems might be that would prevent a carrier from writing the exposure. A lot of times they don't want to buy cyber liability for one reason or another, but or they can't get it. They had a bad claim and they can't get it at a reasonable price. And so, we just move into our risk management stool and help them identify the risk and prevent that risk, figure out how much they're going to absorb, and then how much they can lay off into the insurance side.
So I'm a new agent. My uncle just got put on the county commission or whatever. And I decide, you know what, this is actually pretty cool. I think I'd like to start going down this road. What are a few pieces of advice that you give to agents who are trying to cut their teeth in public entity?
I bet I get a phone call like that once a day. We were on the phone with some guys in Tennessee in the parking lot right before this started, trying to coach them through a broker bid. And, this was their first chance at doing one of those. And we can get into that later, but the guy that, hey, I just got a relationship on the city council or city manager, whatever it may be, they call us up and I try to give them any kind of X dates, carriers, anything I can tell them from our system, because we do a lot of research on all this. We've got a big database of X dates, carriers, and we just save everything that comes in so that when we have those phone calls, we got the data to share with those agents. But then I tell them, hey, get in the truck and go down there. Here's what you need to know. It comes up July 1st. It's with this carrier. Let's say it's with a pool. We're still 90 days out. Go in there, introduce yourself, because you got to have that first meeting. You can't just show up and write their insurance, and that's any insurance. But from there, hey, let's figure out when they're going to start looking at the renewal. Let's see what council meeting they're going to vote on this. Can we get a copy of the loss runs? And we tell the agents to get the applications that they're using with the current insurance carrier. We don't need them to come hand 40-page public sector application to them. And so that agent goes, and we call it the shoebox full of information. Just get as much as you can there, send it to me and Bob. And from there, we'll go get those quotes and get you prepped and ready to present to council.
Build the application.
Yeah, build the apps, send it to the carriers, have the carrier calls. But Bob and I have presented to hundreds of council, or even sat behind the agent at the council meeting. And if he needs us, we stand up and talk. Otherwise, we just stay seated.
Every now and then they'll throw us a lifeline.
But, and we talk with cities on Zoom calls with our agents. But we want that agent, that local agent is going to be the face of this whole deal. We're in the background. I don't care if they don't even know who Saville is at the city. I want the agent being the rock star, and we're in the background doing all the work.
A lot of meetings I go to, I don't even take cards, because when I give them cards, they call me.
So I guess my question is, I'm thinking from our perspective, like in the middle market, we're selling on value, but I could see it being very price driven in the public sector. Is that the case? Or is it totally up in the air? Like what's that look like?
That budget's important, like we said earlier. So a lot of times when we quote against a pool or association or a league, they call it something different in a lot of different states, but we can come in pretty hot. under these pools, especially if it hadn't been bid in 20 or 30 years. And I have a local guy that got his foot in the door and got us the information. And yeah, we can, and it's very price driven then.
Yeah.
But if you're in a bid situation, especially if it's a broker bid, and what we mean by broker bid is it's a request for qualifications, and I'll call it an RFQ, as opposed to an RFP, which would be a request for proposals, which is what you would think about as providing a proposal to an insured. RFQ, which was what we were helping these folks with today, it's a beauty contest with the brokers. So we'll step in with the retail broker and use our resources and their knowledge. And I spent 4 hours working on a broker bid for one of our brokers in North Carolina yesterday, while I watched the golf tournament. We got it done, and we have a conference call with them in 2 hours to review that and fill in the blanks and fill in a few things. But we tell brokers that if broker bids can be wonderful things, if you have the resources and the information to impress the city or the county enough to select you. But that's probably a 40-hour venture to put that broker bid together between us and the broker. It's really an involved process, and you really have to know going in. You have to need somebody like us to be able to tell you if you have a prayer of even winning that broker bid.
So one of the things we go after is troubled workers' comp accounts, right? My theory in life is that if your mod is 1 or higher, you should be my client, so I can help you get down to your minimum mod. And we have a lot of tools and resources that help us do that, whether it be, using Mod Advisor to audit the mod, or using a company like Yellowbird, who's outsourced risk management, to go and do baseline risk assessments or ergonomic studies or whatever else. What are the value adds as an agent that I would need to be thinking about having in my arsenal if I'm going to go down this road? Because it can't be, I've seen, like I said, I don't go after this kind of business, but I've seen a lot of different program structures and things, and I always point them to y'all. But, I'm just interested, what should I be looking at from if I was going to build out a client experience platform for public entity?
Where would you start, Carson?
I mean, most of our local agents, their biggest value added is that they're local. They know everybody in town. They can relate to the other employees because they probably went to high school with them. I can't replicate that, and I can't be in Nebraska tomorrow to meet with the city. And so these local agents that know everybody, you just can't beat it. And that's why we use them. Me and Bob write 2 accounts direct out of 350 cities and counties. So we've had the opportunity to quote other ones direct, but out of respect for our agents, we said, we're going to use that local agent on every one of them, whether he's a super expert in public sector or has no idea and needs us to coach them through it.
Yeah,
so,
David, if you want to write that school board you talked about, I think we could help you do it.
I don't know they'd give me a meeting, to be honest with you at this point. I got a fair share of their rear end when I was in front of them the last time.
Well, we can appreciate that too. But we can even walk in an adversarial situation and help you be successful through if they have claims, poor claims. You're singing our song, because we step into risk and we fix them. And a lot of agents will call us when it's their renewal and they've had bad claims. They say, what do we do? So we lay out we get that call and we lay out the sort of the landscape of what carriers would be available and what carriers would not be available. And usually within 24 hours, we can tell you where that coverage will be placed by the insured 3 months later. Just based on the facts and our knowledge of the marketplace. And Kyle, we can save you days, if not weeks of time going down a rabbit hole.
I believe it. So you've mentioned pools and/or leagues several times. Can you explain to the listeners what that means?
Yeah. So the best way to think about this is like MetaShare, but for cities. So it's a shared risk retention group. And so Georgia has the GMA for cities and ACCG for the counties. And we keep saying Georgia because we're in Georgia and we know this state the best, but you run into every state has different pools. Tennessee Municipal League, Texas has a ton of different pools, whereas Georgia's specific has to have one pool for the cities, one for the counties, one for the schools. They don't work with agents typically. Some states they might, Tennessee Public Entity Partners is a pool and they will work with the local agent. I don't think they pay them very well, but they will work through a local agent. And then we've seen recently, Missouri will do it too. We've seen recently a lot of pools going around that local agent and cutting them out. That's been a pretty hot topic because agents calling us saying, "Hey, I used to write this for 20 years and now the pool's gone direct to the county."
Pools are interesting because wouldn't it be great if David, if on all your business you could require them to any other agent to notify you 90 days if they're going to have somebody else working on it. I mean, that'd be wonderful. And that's the way the pools work. And they've got also, wouldn't it be awesome if your carriers, if they had upside down on all their risk and their losses exceeded their premiums and their surplus was dropping, that you could just go back to all your insureds and say, I'm going to collect another 20% this year because we need to bolster our surplus this year. Well, the pools have that ability to do that. And that's not advertised when they go in and make that presentation because usually people don't understand it.
That was actually what one of my questions was going to be when I think I even heard you say like risk retention group. In my experience, when you start putting RRGs together, they're accessible. There's all kinds of hidden things that could happen on the back end. And I mean, it even happens in the workers' comp world. There's still several carriers, and I'm using air quotes when I say it, in the state of Florida, that you have to have your client sign off on a sheet that they understand they're going into a self-insurance fund as opposed to a regular carrier. And, now you have to like I sell against that all day long because you don't have to deal with that in the regular business world. Unless you're a problem child or a really, really good performer and they're trying to buy your business, you just typically just go find another carrier that's A-rated and you don't have to worry about it. But, I don't think agents often think about the fact, number one, your E&O likely doesn't even cover you placing business with a risk retention group. You better ask and make sure that you have coverage for it. Because I can tell you that when I buy mine through the state of Florida, everything has to be, I think, B+ rated or higher. Or if it's on the Demotech side, it has to be, A or A- rated or higher. But, it's just like, writing a condo policy or whatever else, you have a catastrophe come in and they have to replace common ground and all of that. You're going to get assessed for that, right? It's no different in I would imagine it's no different in the performance of these funds.
That's true. And I don't want to mislead folks to think that every municipal fund or municipal pool or whatever it is not good. Some of them are very good and have strong surplus, but others, the school pool in Kentucky went under. It was maybe 2 years ago, and then there's others, and some in New Jersey and some around the country. They're few and far between, but it happens. So that risk is always there, or they wouldn't have these requirements that they have to sign up for. And part of the reason they have a 90-day notice requirement, that's not set by the pool, that's set by the state of Georgia. So you can't criticize the pool for having that requirement.
So why would the state set it at 90 days?
To protect the pool. If they're going to approve a pool, they only have a certain amount of regulation over the pools. They look at their financials and there is some regulation. but rates and forms, it depends on the state as to the degree that they review them, more like a surplus lines carrier. So, the pools are a big part of the public sector. They probably write 50% of the business in the public sector.
Why would I want to go into a pool as opposed to working like with a firm like yours?
If you're a city,
Yeah, in general, like the people that are in there, if it's somebody that, let's just say, they have a choice, they can go one way or the other. Why would they pick a pool over? I mean, I don't know why I would go into something where I could be assessed at some level if it doesn't perform well, or any number of other things. I would also think that if I'm an extremely clean risk, I don't want to go in and subsidize people who are performing worse than what I am if I can be getting benefit, but through pricing in the open market. Like, I don't understand. Like, is it kind of, so again, in our world, we think PEO, right? If you think of like a professional employer organization, why would people go there? Well, they want to pool risk. They might be able to get a little discount on their comp. They may be able to get their medical a little bit cheaper or whatever else, but there's also a lot of disadvantages that could come with going into a PEO. Like most, if not all, EPLI policies for PEOs don't have a third-party endorsement, and that's kind of a big exposure for most companies. They're only going to protect the actual things that happen inside the member company. And so I feel like, if you really, really know what's going on with the pools, it's kind of like only the business that really should have to go to the pool is what ends up in the pool, as opposed to the really clean business. So I don't know if there's an attraction that has them go there because it's based off of price, or if it's necessity that drives them in that direction. Because I don't know that I would ever want to be in that situation.
Well, the pools were created out of necessity in the mid 80s. It was a very hard market. Carriers were not familiar with the public sector, and there was only one or two carriers that were offering coverage. So that's where the pools came from to start with. A lot of times you got to understand the framework of assessments and how that would impact the city or your firm. But these are laymen that sit on the city councils, and they don't always understand all of this. All they understand is they may have 300 members, and those 300 members can't all be wrong. And so you call it a pool mentality, but they're going to follow that herd. And if their neighbors are doing it, that might be good enough for them. But and you can't expect it. I couldn't sit on a hospital board and tell you how to run the hospital, but that's part of what they do. They have to make decisions every day about stuff they really don't know a lot about.
I was going to say, it sounds like an education issue, something that we talk about on here all the time.
Mm-hmm. Yeah.
Well, and a lot of our agents, the reason they have that business is because it's important to that local government to keep tax dollars local. And they like the fact that, hey, we've paying money to people within our economy that's going to recirculate that money to their employees and to the restaurants at lunch, and
a good point,
not to a state pool that goes straight to the government and it essentially never comes back.
What'd you say, Kyle?
I said that's a good point.
Yeah.
And a lot of agents push that.
Yeah.
This leads us into the next step of the discussion, and that is if I'm an agent and I want to write these cities, let's say I'm going to pick out the 20 cities, let's use Atlanta, in Metro Atlanta, and I want to determine if I should solicit those and what my probability of writing them is, and how do I assess that process. And our little nugget of information here, and I know, Dave, this is near and dear to your heart in the sales process, is that the first thing you have to identify is what's your avenue to success. Is there an avenue at all? And if you can't identify an avenue when you start, you either need to call somebody, go find a friend, or move in a different direction. And I've analyzed the reason we don't write business, or sometimes we lose a renewal. You'll never believe what the number one reason is, because it's so simple, and that is we don't ask what the due date is. It can't be that hard, right? Year after year, it can't be that hard, but that's what we forget to do sometimes. And a lot of times when we send it to a carrier, we want to make sure we tell them what that due date will be, and that we tell them where their pricing needs to be. So if we can't identify those two things on the front end, and then give a narrative to the carrier as to why they should work on this risk and not the other 40 on their desk, then we shouldn't be working on this risk.
And that translates to the city, because they're voting at a council meeting, and that's on the calendar and on the agenda. You miss that, you're not right in the city.
Mm-hmm.
So you better know when the council's voting on this. And it's not always going before council. Some of your smaller towns and cities might not take it to council, but
Mm-hmm.
at some point they've got to get this in their budget, and the city manager's got to make a decision. So you better have your quotes ready and better have a game plan, or else you'll miss the boat.
Well, here's the last thing I'm going to ask, because we're getting close to an hour. I want to be respectful of your time. I'm an agent out there. I think that I have a pretty good relationship with a couple of people that are in my local town. What's the best way for them to engage you?
Me and Bob answer our cell phones 7 days a week. People call us crazy for giving that number out, but we answer phone calls, emails.
Unless it's our anniversary.
Yeah. Our wives aren't too wild about us on the phone all the time, but I'd say just call us. Call my cell phone. We'll sit there and talk. I mean, I'll probably have that conversation with an agent this afternoon. Okay, tell me who your relationships are. Tell me what you know about the city. Okay, here's what we know. Let's get a game plan, and then let's touch base after you meet with them.
Yeah, we try to get all our emails done by the end of the day, which means you might get an email at 10 o'clock at night.
I know. And if you're like me, I was telling somebody earlier, I'm usually up most nights between 1 and 3 or 1 and 4 in the middle of the night, because I can't sleep. So I'm usually replying to emails and stuff then. So if you've sent me a message and haven't gotten an answer by the time you go to bed, probably need to shut your ringer off or your notifications, because there's a high likelihood it's coming to you in the middle of the night at that point. So
I would, to get back to your question, I would encourage agents to just call us, and not to write a piece of business, but to just ask a question. And we can answer, I could answer most questions. I've done it for 40 years. And so I know policy forms. I've written some of the policy forms, and there's not many situations I haven't been in.
Well, and after doing it for 40 years, you also know who the usual suspects are too. You know the ones you want, the ones you want to avoid, and you can give good counsel in that area as well, I'm certain. So people, this has been Carson and Bob with Saville Public Entity. If it is something you even remotely considered looking into or writing, or feel like you have relationships with, or if you're one of those agents out there that's dealing with your direct underwriter, trying to figure out how to cobble something together and make it work, stop doing that. Pick up the phone. These guys will answer your call. Reach out to them. I promise you they can help you. They may not be able to write it, but just giving you the information and the education that you need is going to make your life so much easier. So I encourage you to do that. Guys, I appreciate you taking time out of your day. I apologize for the hiccup last week. We did end up having a very fruitful meeting for my youngest son's IEP. Those are always such a pleasure to go through.
Oh, yeah.
And, my wife, thank God, I'm married to the right woman, because she works with special needs children for her occupation. So she understands that arena very, very well and knows how to navigate it. So most of the time, I go along for the ride just to be present and listen and learn from her, and she drives the bus. So I appreciate the grace you extended in coming back on. This episode's been fantastic. I learned a ton. I know our listeners have learned a ton, and I hope that translates. Sorry to Mrs. and Mrs. Saville, but I hope it translates to more cell phone calls for you. So,
Okay.
And the
Would that
last
be-
point I want to make actually real quick, we mentioned earlier, 7/1 is a big date for these cities and counties. If you're an agent and you're trying to go after one of these, the time is now to go meet with them.
yeah,
because
absolutely. And so that everybody knows listening, just to sort of put a timestamp on this, we're recording on 2/20. This podcast is going to drop next Wednesday, March 1st. So our inventory, when we moved over to block recording on Mondays, we depleted the inventory a little bit. So we're building back up to a little longer turnaround. So, people are going to be hearing this message at exactly the right time to go out there and start making some waves. So good point, Carson. Thanks for bringing that up. Everybody else, we'll catch you the next episode. See ya.